Best of mornings to you, traders. I hope you're all doing well this morning. Morning, Kay. Morning, Stell.
Top of the morning to you, laddie.
Top of the morning to you, boys.
How are you?
All good, mate. All good. It's Friday for me. I'm in a spiffy mood.
Of course it is, isn't it?
Yeah. Yeah. I'm looking out my window. I took the kids to school today. It was murky, grey, misty, drizzly. I looked at the forecast in Spain. It's 27 degrees.
Nice.
I'm looking forward to some sun. I'm a bit like a lizard. I need sun on my back. Do you know what I mean?
Where are you off to, Ryan?
Recharging. Sorry?
Where are you off to?
Off to Fuengirola in Spain, to my dad's place. He's got
very nice
dinner out there. So, yeah, can't wait to get some stuff back. First family holiday abroad for 4 years.
That's how the 1% live, everyone. No, enjoy, mate. Enjoy it. I know it's been a while, so it's well deserved. And you know, we're gonna be here with Kay to pick up the pieces when you're gone.
Well, hopefully there's not too much broken pieces on the ground while I am. But yeah, looking forward to switching off from the screens for a bit. But I'm sure I will be popping in now and again just to make sure you aren't breaking anything, you two. I know what you like while the cat's away.
Nice.
Anyways, let's get on with some work because there's still work to be done today. And we're going to start over in sunny Japan. I think it's sunny. I'm just guessing at that fact. And, I don't know, bit of a subtle change in language from the outgoing sake drinker. Kuroda says he expects real wage losses to shrink, i.e. the gap between inflation and wages, so that wages become positive. He says, well, wage pressure is heightening. He also said, and this is a key comment, it may not come immediately, but Japan is closer than before to sustainably hitting 2% inflation target. That's a bit of a change, eh, Kay?
Yeah, now now that he's like days away from leaving the ship, he's preparing the terrain for his successor, right? Yeah, it's a little bit of a change. We also heard from the two new deputy governors overnight.
Yeah, those,
The one was I trust you're going to come to that. The one was let's say talking along the same lines, and the other one was is definitely an old Kuroda mate, keeping things in check. But yeah, Kuroda. But they also saw the wages, right? We know that the wages were a big thing. There's a report out like an hour ago or half an hour ago, F.A.C.E, saying that they expect the wages to rise a healthy 3.8%. That was like a number which was touted before we got the other results, because when we had the other results out of Japan, it was closer to 3 than 3.8. But yeah, Kuroda is slowly preparing the terrain for his successor. Yeah.
So on that wages thing, then, because I can't remember, what was the last CPI? Was it 3.1%? That Bank of Japan and the national CPI?
Yeah, the national was there, and the core was 2.7.
Yeah. So if wages are going to go up 3.8%, that puts them into real positive numbers, albeit, you know, we're talking marginal. But it's more a case of inflation coming down to below wages than wages going up above inflation, which would suggest that if that happens, and given the nature of things, how small things can lead to big things in Japan, if they get real wage growth above inflation, won't that bring inflation up behind it?
Well, as we've already said, it's a case of what is pulling what, you know. The wages have been a response to, they haven't virtually moved. Real wages have been really going down for the past 35 years or so in Japan. So it would be a case of catching up on the rest of countries. So I mean, in theory, yes, but it's also a catch-up move. So got to be a bit careful. Is the Japanese starting to spend all of a sudden on the back of it? I'm not sure. We can't forget that Japan, the Japanese is a saver, right? But it throws the window right open for the Bank of Japan to do something, right? And I'm really thinking that if they don't use it now, it may be closing, because if the rest of the world is starting to feel the pinch from higher interest rates, they are not going to import inflation from the rest of the world. It's actually going to push inflation back down. So they have to do something when a waiter walks in.
Yeah, no, I agree with that. Just going over the other BOJ deputies, as Kay mentioned, Uchida said it's hard to get markets to price in a YCC adjustment early, so potentially hinting at that. He also said a tweak to YCC undoubtedly becomes an option if conditions are met, but that we shouldn't communicate any policy decision in advance. The BOJ won't rule out any option on future policy. And then the other guy, Himino, said that the BOJ must maintain ultra loose policy to support the economy and lay the groundwork for firms to hike wages. So from those comments, and there's also some from Kishida, I'm flipped a bit now. I'm thinking maybe looking at shorts again in dollar yen to run into the next BOJ meeting, because this does, as subtle as it may be, it does seem like, as Kay says, the window has been opened for the Bank of Japan to at least change their language slightly. No one's expecting them to turn up at the next meeting and say we're hiking rates in 3 months' time or anything along those lines. But any switch, language change, word change that insinuates they may be moving away from easy policy is going to be big for the yen, whichever shape it comes. But looking at Kishida, he came out saying he's aiming to narrow wage gaps between Japan and overseas. And we've switched arrows for pillars, because he says wage hikes will be one of the 3 pillars of new capitalism. He's aiming to draw up guidelines for steps, including wage hikes and reskilling workers by June. So he's still wants to go, hammer and tong in getting wages up. So as I said, it's feeling like more and more this snowball's gathering a bit of pace. Kay, do you think? And all round on this wage
don't
issue.
forget, Kishida is a politician. He wants wages to go up, and if possible more than elsewhere. He's a politician, right? And if wages go up, that will also allow them to stop having to inject all those stimulus plans, right? So yeah, I mean, he's obviously going to push for wage hikes as much as he can, and it's also a fact that if you push for wage hikes, you actually make Japan a little bit more attractive again. This is really, I think that is 100% the political game that he's playing right now. And trying to get more investment back into Japan, more workers back into Japan, because the foreign companies, looking at Japan's inner economy, what's to do in Japan has not been brilliant over the past decade or so. It had a kickstart after the quake, but then it waned a bit again. So I think that's more of a political plea than an economic one, than really saying like, oh, it's gonna be all good,
Yeah. I don't know what these 3 pillars are. Is this the new 3 arrows? It's not had much of a fanfare. 3 pillars of new capitalism. Is that something that they've just decided to call the project, if you like? Or
the project. Yeah, that's a good word.
Yeah, 3 pillars. Anyway, moving on and keeping to the data and inflation. Aussie CPI dropped more than expected to 6.8% from 7.1%. That firms up pause rhetoric from some of the banks and market expectations. But there's some weird stuff going on in these expectations. So Westpac said the CPI drop cements a pause in April. RBC now sees them pausing in April, but then hiking again in May. ANZ said the data shows ongoing strong inflation momentum, so still going for a 25 pip hike in the next meeting. HSBC says the decision next week, and that's on the 4th of April, by the way, is going to be a pause. UBS reaffirmed that they will pause in April and then do a final 25 hike in May and then a cut in November. Capital Economics say they will pause next week before hiking again in May. Gold is still in the camp of hike next week. And Citi is now shifting towards a hold for next week. Current probabilities show an 86% probability chance of pausing next week with a 25 hike, the balance. What's going on with this hike 1 month? Hold 1 month, hike another. Still, it's like a light switch.
Who the hell knows? I don't know. It's yeah. I have no answer. Sorry. Yeah. No. I mean,
pause.
I guess that's taking the slowing down to another level, right? It's hike pause. I don't know. It's one of the things I can't really explain.
I can't get away about it. Central banks don't do that. I mean, I can understand if they've got big, worries about the banking system, like everyone else has been looking into it. You could say maybe that's the reason behind it, but there's not been anything happening in Australia that would sense that, and we seem to be, touch wood, over the hump of all this banking worries. Kay, what do you make of that? Pausing and hiking again? That's a bit bonkers, isn't it?
Isn't there some worries or uncertainty surrounding the housing market over there? I'm not honestly, I'm not 100% sure. And if you still print 6.8% CPI, but RBA has not been really. They were the first ones to hike, right? When it all took off, but then they have never been really uber hawkish. They were hiking, but it never really been uber hawkish. I really don't know the answer either to it, mate. The market is so fast in repricing everything these days. It's sometimes tough to follow. I'd go with the majority, and they put it on hold, but also in line with all central banks. They are now just data dependent, right? So if this thing comes out a bit sticky, if the numbers are not really falling out of bed, the real economic numbers, there probably is room for another one. And yeah, and I don't really understand sometimes why the market is pricing in such funny things. I'm really putting it down to hedging and rebalancing flows and stuff. I think the bond books have been completely thrown around several times already this year. So and in past year.
Yeah,
guys, one thing we have to remember, and actually our friend is mentioning Australia, Norway, Canada. Norges Bank did the same thing, right? They hiked in December and paused in January, then hiked in March. Yeah. I think it has to do with obviously with market uncertainty as well. Obviously, in countries where inflation is not at 10% like the UK, they can maybe afford to take a breather and reconsider just in case markets go to the toilet. And but yeah, I don't have any other explanation for that.
Yeah, it's a good point. And you'd expect some of the smaller banks to maybe do that sort of thing, but not someone like the RBA, one of the perceived majors. Well, it just seems strange in my mind. I don't know I don't know what they do. I don't know whether they hike at the next meeting. If they've got a reason to hike in May, surely that they've got the same reason to hike in April is my logic. But who knows what goes through these clowns' minds at these times. All we can do is trade it and trade what we see. So yeah, that's where Australia sits anyway. If the Fed go to something like that, well, you'd see bonkers in the markets if you ask me. But let's hope what we don't. Over to the UK, and we've had some mortgage data, lending data out. Mortgage approvals beat expectations, were up, had been sliding a while, so good to see some new year pick up there in February, beating expectations, as I say, there, and higher on last month. Mortgage lending, though, was down or wasn't as strong as expected. So could be that people are just taking out smaller loans for mortgages, topping up, that sort of thing. The consumer credit data, 1.41 billion was borrowed on consumer credit, down from last month, but higher than expected. Keep an eye on the credit card part of that, and 600 million was put on the plastic, which is just half basically of, or just over half of what it was last month at 1.1 billion. So that January number, as I say, it got marked with some good retail sales in that month, so maybe there was some additional spending on the cards to do with that retail sales, and that's pulled back in February, and much the same we saw with retail sales as well. But it takes a little bit of the red flag down a few notches. If we'd have seen another huge jump in credit card spending, that would have maybe started to flag some stresses among the population. But down at 600 million, it takes some of the, as I say, the red flag down a few pegs. BOE's Bailey was out, and again he spoke, and the pound didn't crater into a fiery abyss. Should not be the norm that all bank deposits are guaranteed. Once you put a deposit guarantee in place, you risk starting a run when it comes to removing it. Fair point. We see some evidence of tightening in credit conditions, but not critically. It's global markets are testing banks for weakness. Again, he's probably got a good point there, as we've seen. Over to the ECB, and Muller said that there may be more differing opinions at the next meeting. We must still worry about upside inflation risks, and underlying inflation is an area of concern. There's probably room to raise interest rates. One of the bigger hawks, ECB's Casimir, said, we agreed we will not give guidance about the May ECB policy meeting. Thinks inflation is too high for too long. Core inflation will be key in nearest decisions. We should continue raising rates, possibly at a slower pace. So that's a bit of a dial down from one of the hawks. And he also says there is a real risk banks will curb lending. Coming over to the US, and yesterday there was some house price data, which was in the positive in the main. The 20-city S&P came in negative on the month on a seasonally adjusted basis. The national index for the 20-city year-on-year came in as expected, 2.5% gain, but down from the 4.6 prior. The national number for the whole of the US came in at 3.79% year-on-year. That was down from a 5.63% prior. The F.A.C.E numbers out as well, small up on the month, but again the yearly number coming down as well. So we were speaking about this yesterday, keeping an eye out for these numbers. If there are going to be tighter credit conditions popping up from all this bank stuff, it's going to be in house prices that you start to see it. Obviously, this is January data, so it doesn't have an impact on what's gone in the banks so far, but it's already showing that maybe the prices are starting to moderate somewhat in the US. Then we got the US consumer confidence number, which surprised to the upside, was expected to dip to 101 from the prior number, came in a healthy 104.2. Current conditions in that number also improving to 100, that came down to 151.1 from 152.8. Expectations rose to 73 from 69.7. And that all-important one-year CPI number came in at 6.3%. That would have been unchanged, but the last month got revised down to 6.2, so it's actually a gain in inflation expectations there, but only by a pip, so not much to take from that one. In politics, US House Speaker McCarthy said they're very concerned about where we are on debt limit talks. This is still the ongoing stuff, which will not likely come to a head until June, I think, which is when the current standing measures expire and they've got to get a deal done. So we're still in the chest beating stage until we get probably about 2 days before that deadline. And some news on the Deutsche Bank moves last week. Bloomberg reported saying that it was a single €5 million bet on credit default swaps tied to Deutsche Bank that triggered the sell-off last week. One big trade was placed and that sent jitters through everyone else, and everyone started wondering what they knew that they didn't.
Do we believe that? 5 million, seriously? Do you believe that?
I do. Well, yeah, I can actually, because it came out of nowhere.
Yeah, but it's not an illiquid market. It's a market that trades, and I mean, I don't know. It might be true, but I just find it hard to believe.
I don't know. I mean, if you suddenly heard that someone had slapped I mean, I don't know the sizes of bets people put on these things, but if that 5 million is a big bet, and someone slaps that on in the midst of a banking crisis, you know, it doesn't take much to try and put 2 and 2 together, come up with 5, and think, you know, what do they know that we don't? And then everyone jumps on it.
Yeah, but 5 million on CDSs, I mean, it's just too small a number in my opinion. But anyway.
Yeah, I say I don't know. I don't know if that's a small bet or not. But you know what markets are like. You've been in the game. If you see someone putting on a trade and think they know something we don't, you know the market always tends to follow and jump on it as well.
True.
It's push the ask questions later, isn't it?
True. I just think that the size has to be of some significance. It's like me saying, you know, I'm lifting offers in euro dollar in 100 grand anywhere. It doesn't matter. It won't make any difference. Anyway, it's okay. You know, just my opinion. I think it's too small a number to make any difference. But
is it an options bet? Is it like a bet where they put like 5 million premium also on the table, or is it like a pure trade on CDSs, which in which case, as Telio says, it's insignificant?
That's what they wrote, that it was a CDS trade, a vanilla one. If it's an option, it's a different story, obviously.
Oh, okay. Yeah, but okay. Yeah, just a trade. Oh, yeah.
Anyway,
options trade. If you put 5 million on the table for something, then I can understand that market makers react to that. But yeah. All right.
Yeah. Anyway, either either, it's Bloomberg reporting it, so you always take it with a pinch of salt anyway. But that's what they said. That's what caused all the problems last week. They are what they are. It's all in the rearview mirror, and by and large, maybe we are over the worst of the bank stuff. Sorry, Stell.
I was just going to say, remember who are Bloomberg's? I'm not a conspiracy theorist, okay, but I've seen a lot of things in my life. Who are Bloomberg's clients? The banks. If you're Deutsche and there is some kind of issue, what are you going to do? You're going to make them write a nice little piece that makes it sound like this was really nothing. Anyway, I'll take my tinfoil hat off. Let's move on.
No worries, mate. No worries, mate. Keep it to hand, though, because the market's full of old tinfoil hat
I've seen firsthand what banks can do, and it's not pretty. So, yeah, let's go.
Let's go. Right then, moving on. Bidden says the banking crisis is not over yet, so doing his best to calm the markets. He says he's done what is possible for banks. Coming over to Canada, and they're going to be slapping some taxes down to bring in some 3.2 billion Canadian dollars. They're going to be treating dividends received by financial institutions from holding domestic shares as business income. They're going to be hooking that tax in over 5 years starting in 2024. So tax rises coming in on that side. That's all I have on the headlines. unless you guys have scraped anything from the barrel that I've missed. Feel free.
No, sir.
No, nothing.
No, not really. Bank of England's systemic risk survey results came out just while we when we started the show. So nothing really outstanding out of there. Banks are still well capitalized. A bit more nervosity second half 2022, but I think that that's still a result of trust in a way, and geopolitics, being more nervous about geopolitics. But I think that's a general thing. So no, nothing really spectacular coming out of there. No, that's about it.
Yeah. Yeah, cool. Just having a look at the data that we've got coming today. Not an awful lot, I don't think. We've got the NBA mortgage stuff just to keep an eye on there. Keep an eye on that mortgage rate as well, because it's going to show if there's been any real wobbles to do with what's gone on with the banks and stuff. Maybe it's hit activity as well. Some pending home sale data coming in later on, but otherwise pretty quiet. One other piece of data, quite funny. If you go and clear out all your shareholders and bondholders of one of your biggest banks in your country, i.e. Switzerland, it's no surprise to see some of your economic expectations dipping. We should say dipping, collapsing. The zoo expectations for Swiss came in at minus 41.3 versus minus 12.3 prior. So as I say, it's probably a largely effect of what went on with Credit Suisse on that one. Right, let's have a look. The Tokyo FIX came and went last night, and bit of a yen seller, AK.
Biggie, yeah. Quite a biggie, and it held through whatever Kuroda and the other guys, Uchida, is it? And Himino were saying it must have been a pretty decent one, and that goes against what some well-known bank analysts were putting out, saying that they saw the rebalancing being yen buying for the fiscal year end. So that's one in the water. But the year end is not over in Japan, right? What our fixings, what fixings are concerned, they are going until the very last one of the fiscal year, and this year it's the coming Friday. So until the Tokyo fixing in Friday, they will actively rebalance whatever they need to do. So there may be some more big figure moves upcoming in Japan. So for the time being, just be a bit careful if you have yen risk on overnight, because you can find the yen at a different level the waking up the next morning.
Yeah, I was hoping that it might go the other way and we get a move further down. Yeah, but hope isn't a trading strategy. We only trade what the market does. But given that we had those comments from Kuroda and Uchida, and yen didn't really react to it, is what's getting me thinking of leaning more towards the short side if we get a decent rally. Because if the month-end stuff is swamping what the Bank of Japan is doing or talking about at the moment, there's a possible reaction trade into the new month when we really switch to talking about what Ueda does at his first meeting. So I'm going to be looking for any sky-high moves we get in dollar yen. I'll be keeping an eye on that. I'm not talking about selling it around here or anything like that, but if we get a move, maybe up to 133s, 134s, 135s, that's the sort of move I'll be looking for to maybe get into some shorts and see what the Bank of Japan do there on out. But otherwise, this month in stuff, it can flip either way. We got a strong move in Tokyo. That's what they wanted to do. They wanted to sell yen. We may get into the 4 o'clock fix and everyone wants to buy yen. So, it's an open book, really. I'm not here to pick a side right now. Let the market do its thing. If it gives me levels to trade, I'll trade them. If it doesn't, I won't. That's the long and short of it. I'm not here to guess what things may do, and I'm certainly not going to trust the bank models. But from here, there's a bit of traffic through 132s, but really for me, it's this 130, 132, 80, 90, 133 area that may be the next decent resistance points in any of these end of month moves. If we get up there and can't get through there, that'll be a pretty good signal that the month end is hitting its head too far up here. And then see what we want to do next week. We have got the NFP next week. It's going to be a bit of a funny one because it's coming on Good Friday. And US.
Are they really going to bring that out on a Good Friday?
Yeah, because I think the US stock markets are closed on that Friday. I'm not sure what that slightly means that bond markets are closed as well. So I'm not sure why they're doing that. I would have thought they might have punted it to the week after, but apparently it's scheduled in. Unless they change it, it's scheduled in. So that could be a bit of a funny one with half the US closed and most of Europe closed.
Right.
So
when is that? Is that next week?
Yeah, next week.
So when you're away?
Yeah, I'm away. I'll be in the bar watching it on my phone.
And by the way, there's a few people asking, "Oh, what's happening? Where's Ryan going?" He's just going on holidays for the next 8 or 9 or 10 days, whatever. So coming back after the end of next week, right?
Yeah, I'll send you all a virtual postcard. But
Nice.
So anyway, there's lots. It's a funny week next week, but you never know what happens. But that's next week, and I'll let you guys set up for that one. And he's asking about Euro Sterling doji candles. No idea, mate. They don't factor into my trading whatsoever. All I know from this one at the moment is it's trudging around in the same old ground, doing largely nothing. So until we get a move either above 89 or below 87, this is just waffling around. So I'm still long, happy to be long while we're above 87. If it does get under there, I'm going to be a bit worried that something has changed. But otherwise, here in the middle, not really interested. There have been scalp opportunities off this zone here, which I've been pointing out forever. I've been on my chart for forever. We get down there, we hold it, we go through it, we hold it, we come back up, we hold it. So if you're a scalper, this is the sort of price action that you're probably making good pips on. If it gets above 82, 2030 or 2025, what do you want to call it up here, then we perhaps get another move up to these highs here. But even so, recently, it's not even looked like really wanting to trouble the 89s again. And even if it does, it hasn't lasted long. So trade the range. We're a bit middling here at the moment. That's the way I'm playing that one. Let's have a look at, I'm not really looking at much at the moment. I'm not looking to take on too much for going away. Dollar CAD finally had a breakdown through this 30-50 area, call it. Tried several times at 50. Then it started nicking new lows, couldn't get through 30s. Then we've had the break. Hasn't had a real confirmation yet, but it's finding resistance. As you can see here, around about 36.20. It was a pretty swift move down after that through the big figure. Down into the mid 135s is the next area to look for that one. Pretty decent support and resistance area that we had on the way up, prior level there. So that was where I'm looking next for the price to potentially pull up. Before maybe having a move down to the bigger zone down here at 135s, 134.60s, which is a bit of a bigger zone down here. But if you're trading this one, I know a lot of in our room like to play this on the long side. I think if we get back up to test 30s and it confirms, doesn't get through, that's going to potentially indicate we're going to be heading far lower. And we might get a move down to that 135 area down there. All else being equal, risk is still looking very positive. Dollar MEX continues to head lower and lower and lower and lower. This was a really good risk proxy pair to watch for that one. Dollar China still not doing an awful lot at the moment, floating around this 86, 88, 89 level. So not much going on there either. It really is a case this week. There's not looking like there's many trends. 1 minute yen's going one way, then it's going the other. 1 minute dollar's going one way, then it's going the other. Euro dollar, that looks to be about the only one that seems to have some sort of trend going on. It's been a grinding higher since we had the Friday low, continuing to creep up, possibly end of month again, coming into the factor on this one. What are you guys making of euro dollar? Does this smell end of month-ish to you?
Good question. I would say the end of month flows probably going to be in risk on, so equities grinding higher, which theoretically should mean that euro dollar grinds lower, right? There's an inverse relationship. So I'm not convinced about the euro dollar in terms of month-end flows. I don't know. I really don't know. If you ask me in terms of what I think is going to happen in the next coming weeks, I think central bank divergence should theoretically push the euro dollar towards 110. But as I said, if risk keeps getting bid, then that's going to keep a lid on things, at least in the short term. I don't know if Kay has any idea, but I don't have any strong views on the euro dollar at the moment.
Yeah, I mean, my only thought with the euro dollar is that maybe it's a bit more yen led, because euro yen's up as well. Yen's been up, or yen pairs have been up as well, so that could be a bit of a drag. Kay, what are your thoughts on euro dollar at the moment?
No, just look at the euro crosses, mate. They are still big. It's end of month, end of quarter, end of fiscal year in Japan. So there's potentially, and as we've seen already on the Tokyo fixing, there's potentially a lot of rebalancing to do. We're trading value date end of month, so I've already spoken about that in length and every month in our trading room. It's typically a day where US corporates may have a bit of shopping to do. So I'm going to be a bit cautious, but if you look at equity moves over the course of the month, there may not be too much to do this month on the end of on the rebounds. But if you look at what happened over the quarter, there may be some interesting moves. The banks are saying that there may be some dollar selling also going on, but then not a lot. Barclays said not a lot will have to be done. The worry for me on or the unknown for me on this end of month and end of quarter especially is those wild bond moves. How much do the money managers have to rebalance and hedge due to those wild bond moves that we have seen? And that's an open question. It could get extremely messy, in my opinion, this end of month, end of quarter. But looking at how the equity markets moved, I'm going to say I would not be surprised if sterling is somewhere an outperformer for the end of month, end of quarter.
Yeah. So more you mainly looking at there for cable, perhaps maybe a move up to those 124 highs again.
Cable, euro sterling, yeah. I wouldn't be surprised if euro sterling, and I'm always talking. It is possible that. I mean, I'm not saying it is going to happen. I don't have the intelligent models in place to exactly tell me what the flows are going to be. But based on what I can roughly see, I wouldn't be surprised if euro sterling closes the month a bit lower. And yeah, why not cable back into those 124s? But today may be a different story, and that's I at least am trading the clock right now rather than specific targeted levels. But give me a cable somewhere in the mid 122s later today, if that's the site, it could get interesting.
Yeah. Well, if you're talking about you haven't got your own models, you just need to pop down to Weymouth Beach, pick up some seaweed, mate, and hang it up in the shed. You probably have more success reading the seaweed than these guys at the banks with their $1 million models.
It's not the weather to go down to the beach today. Huh? Wow.
No.
I'm just looking out of the window. It's miserable out there.
Yeah. But yeah, you know, this is the thing with month end stuff. And as I mentioned at the beginning of the week, if you know we're not having any real big headlines coming out, there's no big problems with the banks dropping out. So we are likely to see maybe the month end having more of an exaggerated saying things at the moment. And it is a difficult time because, you know, you come into this week and you think, right, well, you know, I'm setting myself up. I think the Fed are going to do this or the data is going to do that or whatever your fundamental analysis is. And it just goes out the window at these times, as can the techs as well. You know, if someone needs to buy a ton of pounds at the fix today, it doesn't matter what fibs, whatever you've got there. If it's 10, 15 pips away, it's going to just blast it out the window. So you've got to factor that into your trading. You know, don't rely on stuff right now. The techs and stuff will likely reassert themselves after we finish the month end. But also remember, you can also get moves at the beginning of the month. Because just as people close off some books at quarter end, they re-implement trades or put fresh stuff on first couple of days of the new month. So you can also see some funky moves there, particularly at quarter, half year, year ends, those sort of times, as opposed to a normal month end. So just don't trust anything at the moment. You know, if you get in a trade, you have your stops in play, you play your levels, don't go offside and then be thinking, oh, what do I do now? Okay, I might hold it because it may come back. Trade your plan, you know, but just don't marry a position. If you get some money on the table, take it off. You can half your position, take some position off, put some in the bank, move your stops down closer to break even or in a positive area, and just manage your trades that way. And if they run, fine, you pick up your pips. But if they suddenly turn on you, at least you put some money in the bank and you've reduced how much you're potentially going to lose. That's the only real advice I can give at this time of year. It's just funny. Okay.
And the opposite is equally true. If it is due to month end and quarter end fixings that the market goes massively your way, don't forget to take profits.
Oh yeah, definitely. Never look that gift horse in the mouth. Yeah, and then, but you have to look at what happens after month end. So, you know, let's say cable blows to 126 over the next couple of sessions and around the fixes. You've got to look at that and think, well, there's no fundamental reason why cable's blown to 126. So maybe it's really moved itself out of sync with the fundamentals. And that's where you look at your opportunity, because then you can think, well, this must be a definite short then. And you know, obviously plan your risk, but look for excessive moves on these sorts of things, well, because they're just as much good opportunities as well.
Yeah.
Ali, I thought.
Ali, were you not online 5 minutes ago? Ryan did reply.
On Euro Sterling, yeah. I don't watch. I don't follow dojis and all those funny hangmans, shooting stars, whatever. Far too weird for me. It goes in the witchcraft basket like Head and Shoulders. Kay, do you want to have a little look, or Stel, did you want to have a little look at anything?
Whatever you guys want.
Yeah, I can. Well,
I'll take a look tomorrow when you're away, Ryan. Okay.
Yeah, no worries, mate. No worries. Okay. All yours, Kay. The football gets passed to you.
Okay. Well, first of all, the short. Quick look at those short-term yields, right? Yesterday I was talking about this 404, 408 zone in the twos. It went above just a little bit, but this morning we're trading back below. I'm not sure whether there's a lot of rebalancing to be done in bonds as well for the end of quarter. I can imagine there will be. So expect some volatility around this and pick this level again up once the month is over, I'd say. It also has to do a little bit with the weakness of the dollar this morning, I reckon, apart from what we are seeing on some euro crosses. So be aware of what's happening here, because it can drag the currencies around if it's due to these bond rebalancings as well. So just keep an eye on those things, because we could see moves out of there. On euro dollar, then we were watching in the room. We were watching this 61.8 here, which capped the debates yesterday on several occasions. And this morning we're moving through. We're trading 108.60. I think it's end of month as well in euro, because it's a little bit of an overlay of what we saw yesterday. Euro was creeping up during the European session, then had a little bit of an extension, and then stopped in the US session today. We seem to have an overlay of it. Because if you look at the Euro Aussie, for instance, Euro Sterling went up just a little bit, but Euro Yen is trading higher as well. We are in end of month, end of quarter territory, and I can't repeat it very often enough. I mean, there will be flows out of nowhere from now until Friday afternoon. But the global picture still looks like a recovery one here in euro. And if we would see a move back down to, let's say, already 108 the figure, but more importantly, I think into the mid 107s, that could be somewhere a springboard to start April on a better footing. Don't forget that underlying to everything that's happening now, the ECB is still a bit more hawkish than the Fed right now, and the numbers are not really falling out of bed. So be a bit careful with this euro. Could get a bit volatile today, since we're trading value date month end, and then the next couple of days will probably be telling for what we are doing into month end. Yen, then, yeah, dear. It held around 130.5 again. And today, people are watching this as a bit of a head and shoulders, and trying to break the shoulder line. But also we are seeing this downward channel, depending on which. If you take the first high over this one, it's already broken through 131. Well, today it's downsloping pretty fast. So yesterday this was around, and on Monday it was around 131.60. Yesterday it capped here around 131.30. Today we're through, but then there's another one here. If you take the second one, which comes in around where that neckline or trend line, let's call it a trend line, is around 131.80. We're trading right around there. Keep an eye on what's happening, perhaps at the close of the day, to decide what you're doing. 131.60 is as well a bit of a level, but I'm not going to make too many bets on what's going on in yen until the end of the month. I may have a few quick stabs if running into an hour or running into a fixing. It's pretty obvious what's going on, but trading the clock rather than trading the direction for me is going to be the word, and until the end of the month in most instruments, by the way. Well, Cedric, yeah, is it advisable to stay on the sideline if you're not in the market until the end of Q1? Of course. I mean, it's speaks for oneself, I would say, unless if you have put on a more medium-term or longer-term plan, and you get the move into the direction of your plan. Let's say, for instance, just as an example, if you say, oh, I think euro dollar at 110 is going to be capped. If you have a global plan in place, and the fixings for the end of month, the rebalancing close for the end of month, take it to 110 for no other reason than that is going to be a good opportunity to put your plan into motion, right? But if you're not having any idea, and if you're just watching the markets and or if you're an intraday trader and having absolutely no clue right now, it's a very good idea to stay on the side and see where the moves are taking the market, because standing on the side doesn't mean that you don't do anything, right? It's always a good opportunity when you're not really trading much to study what's going on, read up a little bit on news, read up a little bit on articles of research or so, and then make your plans. There's always plans to be made. But yeah, I mean, if you don't have an idea about what's going on, staying out is actually a very good strategy. Then to continue on the yen, because there are no, that's the wrong one. To continue on the yen, because there are a bit of moves going on in the yen crosses, especially. I already showed this the sterling yen and this euro yen in the room a couple of times. We are again at a crossroad here, turning around the 143, the figure. But what we've seen is that this triangle has been pretty well respected. We've had those on the European banking moves. We had this move lower, but it's a very, very, very good triangle to pay close attention to. And we are like at a bit of a crossroad here. This is I call it Shibuya crossing, because it's been traded, it's been respected, but it's been crossed a lot of times. We've traded around there a lot of times. So I think this is an interesting one to keep an eye on for where we close today, because the moves deriving from this may be decisive for exactly going into month end. Either you're going for a retest close to 145, which is possible, or if we start to see flows on the other side again, it may be a failure, and call it 142.70 or so. A decent failure may bring back closer to 140. So I'd say pay a bit of attention to what's happening here. And we see it as well, and I already showed this one a couple of times as well. We see it on the sterling yen. Sterling yen is trying to break, but I'd say when you break out of stuff like that on month ends, on specific events like we had before, watch out for false break. So I would rather keep these 160, those low 163s in mind as well. But in line with what I think personally on the sterling right now, I'm not a sterling bear right now, and sterling may have a bit of legs. So if I see anywhere a move which brings it back down to the middle of this range, we are seeing it hold here around this fib line. I'm going to be interested perhaps for picking some up for the close of the month to really have a drive higher. But for the time being, I'm just observing this. Yeah, the euro sterling, as Ryan already said, it's a range. We're in a channel. It's 80-10 or 80-15 or 80-20, 75-20. You just call it as you like. 5-10 pips outside of the 80-10 range. But we're in a slow downward channel, and as I already said, looking at what happened on the equities, FTSE and stuff compared to the rest, I'm just saying I would not be surprised if sterling ends the month on a positive note. Just saying, I would not be surprised, and we're seeing that sterling is trying to break the past few highs here. I'm not going to jump onto this one because we are trading today. We are trading right now, but keep an eye on where the close is today. If ever, for some reason, we're getting back down to mid 122s, I would be getting a little interested, I think, in here, just because of this idea that I think that sterling may close the month on a positive note. Of course, we are going to be watching towards the close this 124 and a half again. This is where it plays ball or not, right? The cable, it's been a very big level over starting in December, really, all the way back to December, it's been a peak level. So that for the cable. Quick look on what's happening in the metal sphere. Gold is holding this trend line. I said yesterday we are undecided in this 1940, 1960 zone, but it decided to hold the trend line here around in the low 1940s. So that's a good signal. I'm not going to bet too much on what's going to happen into month end or so, but if you look at how it really responds to what's happening in the yield sphere, it's pretty quick to respond. So that tells me that if there is any more dollar weakness also into month end, we could see a retest of this one. 1940, that's your danger zone. Call it 3540. 1940, that's your danger zone now. We start to get back below, you know where your risk is. I think then we're going back to 1900. But in the meantime, got to respect those 1940s. Silver is holding pretty decentness as well. Keep an eye on what's going on here in the 2330s. And on the bottom side, it did hold those 2284s twice. So that's your range to watch there. I'm still in my long-term long still as well, but I'm holding off until the end of the month. Even if I miss a little bit of an up move, but if it goes down for the only reason of month end, I'm going to look to re-enter. Anything else? Is there anything else you guys want to watch specifically? Just going down through the comments. No, I don't see much. I don't see much else, right?
No, not a lot going on.
That was great. Thank you, K-Man.
Yeah, cheers, mate.
Then back to you, Ryan.
Thank you very much.
Happy holidays, mate.
Thank you. Thank you very much, mate. And yeah, I just want to repeat what Kay said. As Cedric has asked, if you're not going to trade, you can do some planning. One of the things to look at is we speak a lot about the fundamentals on this show. You know what central banks should be doing right now. So if you get any moves that pushes the price out of sync with those fundamentals that are obviously going to be more lasting in the market, there's your trading opportunity, and that's what you should be planning for. Look for those extremes, as I said earlier. Anyway, thank you, Kate. Thank you, Stel, for your valued input, and have a great time while I'm sipping pina coladas. Hopefully,
nice.
By the pool. Yeah, so I'm gonna send you a photo every day. You can't talk, Stel. You spend most of your time at the beach anyway, so you know.
That's rumors. It's not true. That is true, actually.
Yeah,
it is true.
I've seen the photos, dragging behind boats and water skiing. Yeah, there's no point in trading if you're not going to enjoy the spoils of it.
Wise words, mate. Wise words.
Yeah, thank you very much, everybody. Do have a great time while I'm off. Make loads of pips. I want to hear you all going on holiday after making tons of pips. And you can buy us all an ice cream. Thanks, Kay. Thanks, Dale. See you all in a couple of weeks. Cheers, guys.
Cheers, guys.
Thanks, guys.